Hey, what's up, family? My name is Brehon, and I'd like to welcome you guys back to the channel. We love to focus on our own financial, personal development. Family, I hope you guys are having a phenomenal start to your day, and I hope your week has been going amazing. Now, before I get started with the video, I'd like you guys to hit that subscribe button, and also I'd like to give you guys a word out of a book in my library, The Magic of Thinking Big, by Charles Schwartz. It's a phenomenal book. I think everyone should have this book in their library. Now, if you're interested in having this book in your library, the link is in the description, okay? All right, now here it goes. Think success. Don't think failure. At work, in your home, substitute success thinking for failure thinking. When you face a difficult situation, think, I'll win, not I'll probably lose. When you compete with someone else, think, I am equal to the best, not I am outclassed. When opportunity appears, think, I can do it. Never think I can't. Let the master thought, I will succeed, dominate your thinking process. Thinking success conditions your mind to create plans that will produce success. Thinking failure does the exact opposite. Failure thinking conditions the mind to think other thoughts that produce failure. So we only think win-win situations. We only think I can succeed, I will succeed. That is the framework for our overall development when it comes to stocks, when it comes to investing long term, when it comes to our personal life, when it comes to our business ventures or our employment opportunities. Man, we only think of success. All right, now family, here is just a little excerpt from an article I found about the real estate economy in Las Vegas. Now, this is just a snapshot of what's going on all over the country, right? The real estate is going to feel it. The real estate is going to feel it. This is what Jerome Powell, the chairman of the Fed, wants. He wants to bring the pain. He wants to bring layoffs. He wants to see housing prices drop. He wants to see interest rates even higher because he's trying to get this economy back in balance. As of right now, you have housing prices are expensive. Food prices are expensive. Gas prices are expensive. Travel is expensive. So everything is expensive. And that's not the way it should be. A person shouldn't have to decide whether they want to put gas in their tank or food on the table. They want to pay gas in their tank or pay the mortgage this month. And so these are the challenges that people are having to face day in and day out. People are picking up second jobs. You know, Jerome Powell, he wants to see the job growth decrease. And he wants to see the number of job placement decrease drastically. But what's happening is the numbers aren't falling as Jerome Powell would expect them to fall because people are having to take on extra jobs, extra work to help pay their bills. But here's just a little excerpt from an article from Yahoo. It said realtors are feeling it big time as well. I put in a call to the Greater Las Vegas Association of Realtors, and the employees I spoke with said that they were averaging about 300 new members every month. This month, she had an estimated 120. However, she has been processing about 30 realtor withdrawals a day. Riffle says that means every day around 30 real estate agents in Las Vegas alone are calling it quits. So this is what Jerome Powell wants. He wants he's pushing for more layoffs, more downsizing, more job restructures. He's pushing for less people being employed based on the job reports. He wants a less amount of people finding jobs. He wants to really bring the pain because the economy thrives on employment. The economy thrives on money, and people are still sitting on trillions of dollars, right? The government gave out trillions of dollars. You know, it's the Fed's job to try to get that money back and take it out of the economy. But people aren't giving away their money so easy. People are beginning to understand what's going on. They understand what the future holds, and they are keeping their money in the bank. All right, so they are continuously saving their money. As a matter of fact, the Fed was supposed to have taken out $100 million out of the market in a 3-month period, and they only had taken out 40. So they are way behind on the 8-ball. And going forward, September, October, November, they are expected to take 90 million out of the market. But do you believe it? Right? So they were supposed to take out 100 million over a 3-month period. They only took out 40. Now they're expected to take out 90, and I don't see it happening. And so we're going to have to wait and see how that thing plays out. But as of right now, we're going to have a meeting with the Fed over the next 2 days, 1 or 2 days. They're going to be explaining to us how much they want to do the increase. Will it be a 0.75% additional increase going forward for the next quarter? We shall see. But as of right now, when we take a look at the market, right? So we all know that this market is a roller coaster, man. It's up and down, up and down. And something that people really don't talk about much is that the market, 65% of all trades are being done by computers, right? So computers are sitting around making all of a large majority of the trades, and they're using basically algorithms. So oftentimes when we get down here to oversold prices, we're going to have a bounce up. You know, we may have a quick sell off, then we're going to have a bounce up, right? And so when we understand that 65% of trading is done by computers, we could try to ride the waves, right? We're going to have to try to ride the waves, but we're not always going to be right. If we are wrong, we want to greatly minimize our losses. But if you just pay attention to the trends, pay attention to the news, there are opportunities to win everywhere. All right. Now, again, pay attention to the Fed FOMC meeting today and tomorrow. We're going to take a look at how things, how the market is going to react to the news. And another thing, the market sometimes is 6 to 8 months ahead of the news. And so the market could say, hey, we expected 0.75 and we're fine with it. Let's start making our run up to the upside, just for a temporary move to the upside, because remember, the overall market is trending down, but we're going to have ups and downs, but ultimately the trend is down long term. Okay. Now, guys, I hope you enjoyed this information. Now, if you did, hit that like, subscribe button, and keep coming back for more wealth building information. Peace.